Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And with that being said, I hope that you are all having a beautiful day or a beautiful night wherever you guys are out there in the world. I put out a post regarding this entire SEC situation. Listen, we just got a big update around the case, and everyone is saying, oh, it's a victory. It's a victory for the SEC. It's a big victory for the SEC. Ripple's dead. It's done. There's been a lot of FUD around it, which we will get to here in a second. We'll talk about it briefly because, again, it's nothing too important. But I said everyone laughed in 2020 when Ripple was sued and XRP was targeted. You guys were around during 2020. It was a dark day. Once we saw the SEC lawsuit dropped, it was a huge moment. Though, for those that were holding XRP for a while, it was a huge moment because what we saw in that instance was a massive shakeout. Because XRP still did a great 16x off of the lows. But in 2021, things got a little bit interesting because we started to see a leak happen at the SEC. And we saw small amounts of corruption trickle out. In 2022, everyone was yelling and screaming corruption while trash talking the SEC and Gary Gensler because, again, we had FTX, we had Voyager, we had Celsius, we had all of these, big things happening around the market, and it seemed like crypto was dead in the water yet again. But then 2023 happened, and we saw Operation Chokepoint 2.0 in full effect, and the war path on crypto rage on even stronger. It is now 2024. And we have the SEC targeting DeFi as a whole and trying to cut off crucial liquidity to the space. I question, who is laughing now? This isn't a Gary Gensler problem. This is an SEC problem. Bill Hinman, Jay Clayton, and Gary Gensler, three prominent names at the SEC that are not protecting anyone besides those who line their pockets. Now, why am I bringing this up? Well, because again, everyone's making a big deal about what the SEC is doing, right? And we have even down here from JV, it needs to happen to give people more of an overall understanding of the token they hold. And this is more of a in-depth view on what's happening around Ripple and even XRP. We have victory for SEC Gov as Ripple was ordered to reveal 2022 and 2023 financials. Post-complaint contracts and details on XRP institutional sales proceeds. Share your thoughts on Ripple having to reveal this never before seen information. Now, in my opinion, listen, when we really look at this, I think that this is just a big nothing event. I really do. I mean, at the end of the day, the SEC is trying to grasp at straws. They have lost and they've gotten beaten by so many names now in this space. I mean, they were taking L after L after L back in 2023. And Ripple gave them one of the biggest L's, with XRP being cleared until at least the middle of 2026. Now we have these things, and it seems as though the XRP space and the community is they're done. They're like, oh, that's it. Ripple's dead in the water. Guys, this really is nothing. I mean, half the times Ripple gives us their quarterly reports and they outline pretty much all of this anyways. I just can't see how this is any different than those quarterly reports. But beyond this, right? Why are we so damn concerned about the SEC? Seriously. I mean, this is a government agency that is doing anything but protecting investors. They're not acting in allegiance to the law. And when we really look at this, right? We just saw this. Awesome announcement by Ripple. Big shout out to XRP drops. After being relatively quiet for the past 3 years in the US for Ripple payments, we're geared up to announce new product updates powered by our money transmitter licenses, MTLs, that cover the majority of the US states. Now, we already knew about this. Again, everyone thought that this was a massive deal, and it is. It actually is. I will say this, right? This is a big deal considering the fact that they spend a lot of time building outside of the US, but they acquired a lot of these MTLs back in 2023. We actually saw a full list of it. I think it's almost covering the entire US. And we actually have down here, this is from the Senior Director, Head of Product Marketing, Payments at Ripple. We're excited to wrap up January with fresh updates from Ripple. I'll pin this in two simple categories, building and growing. Building, 90% of our business is outside the US. After being relatively quiet for the past 3 years in the US for Ripple payments, we're geared up to announce new product updates powered by our money transmitter licenses that cover the majority of the US states. To get the ball rolling, we're hosting a meetup for folks in fintech at our new San Francisco headquarters. Join us for a light panel about Ripple's blockchain and payments outlook for 2024, featuring our heads of product and moderated by USMD Joanne Z, with, of course, their CTO David Schwartz joining. Now, listen, they have expanded outside of the US, and they even expanded in the US. And they've been getting granted these money transmitter licenses at the same exact time that everyone is looking at the SEC and they're saying, "Oh, that's it. Like this is so bad. This is terrible news. I wonder what's going to happen now." And it's crazy to me, and it's bizarre that a lot of people are making a lot of noise around this when it's really nothing short of a big nothing event. Outside of this, right? Now we also got this, which was a huge thing to really kind of focus on, because again, this is Secretary Yellen. This is Janet Yellen. We've talked about her in the past, right? But this is a huge statement considering the fact that they are now sending a letter to her addressing FSOC's calls to fill regulatory gaps in the spot market for non-security digital assets. This is to usher in and accelerate cryptocurrency regulations around, again, digital assets. They're getting regulated. They are. It's inevitable. They're happening. It's coming. And I always had my own diverse thoughts when it comes to Congress. They really kind of just make a ton of noise without doing anything. It's all talk, no action. At least when it comes to the SEC and Gary Gensler. But now we are starting to see some pressure being put on the Treasury around regulations, especially with digital assets. And we actually heard a few things around this in regards to digital assets, if they're securities, if they're not. And it's getting very interesting. Let's actually look into a few things. So first and foremost, Gary Gensler being put on the stage, if you will. Another problem made worse by Gary Gensler. Again, when we really look at Gary Gensler, it's the entire SEC. Let's be real with ourselves. It's not just Gary Gensler. If it was Gary Gensler, if it was Jay Klein, if it was Bill Hinman, guess what? That's three. 3 strikes, you're out. It's the SEC. The SEC needs to be investigated. The SEC needs to be completely looked over. And they need to really kind of connect the dots and see where a lot of money's coming from, where a lot of money's going, because I would probably guarantee you this. There's going to be some sort of payday coming in from incumbents, from big bankers. Maybe it's even going to private companies. We have no idea, but we have connected the dots with ETHgate, for example, and even FTX. I wouldn't be surprised if they looked over the SEC and found a ton of corruption outside of even just Gary Gensler. It's not just a Gary Gensler problem. But we have down here that SEC Yellen is just the latest regulator to share her concerns with Gary Gensler in the SEC Gov's custody role. This role appends years of traditional custody practices and threatens to undermine banks' most basic function, holding cash. Now, again, here's a short clip. It's about 16 seconds long. Listen closely to it.
Do you support the SEC's rule on custody as proposed?
We have had some concerns about how it would impact banks. And that's something have discussed with the chairman.
Do you support the...
So there you guys have it. And again, when we really look at this, is anything going to come from this? We don't know. We have no idea. But I will say, when we really look at what's going on here, I stress the idea that a lot of what we are hearing is just noise from these people. Especially, listen, Janet Yellen, biggest clown show out there. The Treasury is an absolute joke at this point, especially wanting to print massive amounts of money all the way up to $50 trillion. It's ridiculous. But again, these are prominent names that do make changes around our current landscape, especially even digital assets. And the biggest thing that we saw was actually this one from Janet Yellen. And we have that she urges Congress to pass legislation to provide clarity in crypto markets during financial committee hearing. Congress should pass legislation to provide for the regulation of stablecoins and of the spot market for crypto assets that are not securities. Check this out. This is actually a huge statement, a bombshell from, of course, the Treasury.
Council is focused on digital assets and related risks, such as from runs on crypto asset platforms and stablecoins, potential vulnerabilities from crypto asset price volatility, and the proliferation of platforms acting outside of or out of compliance with applicable laws and regulations. Applicable rules and regulations should be enforced, and Congress should pass legislation to provide for the regulation of stablecoins and of the spot market for crypto assets that are not securities. We look forward to continuing to engage with Congress on this. With this overview, I look forward to taking your questions on these, and the Council is focused.
Now, we also have down here spot market solution. The bipartisan Fit for the 21st Century Act, led by French Hill and also Congressman GT, creates the exact market structure that SEC Yellen encouraged Congress to form. Down here, Stablecoin Solution, Patrick McHenry's Clarity for Payment Stablecoins Act also creates the same regulatory framework for stables that Secretary Yellen asked for. And again, when we really look at this, right, the key word there is for crypto assets that are not securities. And we actually don't have any clarity on that. That's the big problem here, right? Because what is a security? What isn't? We still don't have clear laws on that. That's why, like, we're seeing this big push on Congress. We're seeing this big push on this, that, whatever. But at the end of the day, we need to have clarity. We need clarity. So is Congress going to be the ones to bring that? We don't know. But everyone has been hopeful for it. I will say this, though. There's already a lot of regulatory plans in action by some very prominent names, like, for example, the FSB with the G20, the BIS, you name it. I would argue that by the end of 2025, we should have regulations for crypto. And this is also why I say, like, this is the last big bull run that's going to mint us massive amounts of wealth, because volatility is going to start to die off. I mean, why do you think that we have Bitcoin ETFs now? Why do you think that we're seeing major pushes on regulation? They are going to regulate this space, and we're going to see this space morph into a more traditional financial marketplace rather than one that's, not regulated. It's very volatile. You're going to see those 10, 20, 30, 40, 50x swings. That's going to be a thing of the past. But what we will see is utility becoming the major price driver. And I think that that's where everyone, including a lot of those XRP holders out there that have been waiting so patiently, are going to be really celebrating. But also we have over here from 801_XRP. This is the Financial Stability Oversight Council hearing 2624. Questions about digital assets, stablecoin legislation by Warren Davidson to Secretary Yellen. Digital asset did play a role in the banking problem last March with respect to Signature and Silvergate banks. There's a potential with stablecoins, which we've recommended to Congress. They require legislation. Stablecoins has no appropriate regulatory framework. Check this out.
Mr. Davidson is now recognized for 5 minutes.
Thank you, Chairman. Madam Secretary, thank you for being here today. And I just want to highlight a couple of the activities of FSOC. For the last 2 years, FSOC has made digital assets one of its top priorities. Do you believe that it is appropriate for FSOC to list digital assets among its top priorities, given the relative size of the market?
Well, the market is relatively small, and I believe the annual report states that. And the connections are not enormous to the banking system, although involvement in digital assets did play some role in the banking problems we had last March, particularly with respect to Signature Bank and to Silvergate. So there are concerns along those lines.
Well,
but
in that
there
sense,
is the potential for example, stable coins that we've made recommendations to Congress require regulation. They could. If
the Secretary will suspend, if you could please exit the dais for members. Thank you. We can continue. Thank you. Stable
coin, there is no appropriate regulatory framework.
We've certainly been working on that. It'd be great to get it across the finish line.
Well, I appreciate that, and we've tried to work on a bipartisan basis with the committee to see legislation enacted.
And so the concern would be that there's some systemic risk to the market because of the introduction of digital assets. And you referenced Silvergate. They didn't pose a systemic risk to the market. In fact, they wound down in a very orderly fashion with no risk to the market. Not true of Silicon Valley Bank, but that was interest rate risk, not digital assets. Signature, on the other hand, there was an FSOC meeting on Saturday, and on Sunday, the assets of Signature Bank were seized, And former Congressman Barney Frank, whose portrait hangs right there, former chairman of this committee, said that it was because they were banking crypto, not because they were insolvent. So it kind of highlights, is there a coordinated effort because there's a disfavored industry like digital assets, or is there a coordinated effort because there is actually systemic risk?
Well, FSOC has recommended to Congress that stable coins require a regulatory framework. No stable coin at this point may yet have achieved the scale that would pose a systemic risk, but certainly that could happen if a stable coin were widely used for payments. And you have the classic run risk that's associated with that if the stablecoin proceeds are not invested in a secure and utterly safe
Well,
manner.
this is the case.
And we've seen this happen with similar types of, it's essentially a banking type of product.
It's not fractional reserve banking, and those banks are regulated. Stablecoins certify that they have $1 of government-backed securities for $1 of tokens issued.
They don't always certify that.
No, the three that are regulated in the United States by the New York Department of Financial Services, or four actually, do certify that, and they are state regulated. The one that doesn't, that the Treasury Department and others seem unwilling to address by providing clarity in our market, don't certify that. Tether is a time bomb, and it is offshore, and it's the only thing functional, frankly. Everyone is moving offshore because we can't agree to regulate our own markets. And frankly, there are people that really would love to regulate the market. There just always seems to be an excuse not to.
And I will say that last statement there made by Warren Davidson is true, right? Everyone wants crypto regulations that at least sees the value in the long term. But the problem is that nobody seems to be wanting to work on this together. But that's also why I said, like, a lot of what we are seeing around the SEC and a lot of what we're hearing, it's all nonsense. It really is all nonsense. So the Treasury, Janet Yellen, Secretary of the Treasury, mentioning and urging Congress to pass legislation to provide clarity in crypto markets, that's a pretty big statement there. Are we going to get anything from this? We have no idea. But it would be in the best interest that Congress does pass legislation on this because the crypto markets need clarity. But like I said, there's already plans in place. By the end of 2025, we have literally roughly 2 years now to make as much money as we possibly can in this volatile landscape. Because outside of that, once regulations are in, it's no more fun and games. It's, does your project that you're invested in provide any value? Are they compliant? And are they compliant with the regulations? Now, we don't have any yet, but frameworks are being drafted. That's why I do think that a lot of these frameworks that are listed here, the stablecoin solutions, the spot market solutions, these are crucial things to focus on because there's going to be a lot of frameworks that are going to really solidify regulations around specific things, around stablecoins, around spot markets, and even, trading venues. This is the start of regulations around crypto. And I really do just want everyone to be aware that when we see things like this around the SEC, listen, the SEC has practically zero jurisdiction over the space. There's zero transparent laws. There's no clarity for crypto. We need clarity. And by the way, Ripple has already made their name in the US. They already have a massive amount of MTLs under their belt. I would not put any weight at all on this victory, in quotation marks, if you will, around the SEC and Ripple, because I don't really think that it's a victory. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.